Wishing you all the best for 2023. Well, moving on then, NCC, that's the next corporate on our radar. The construction major has bagged 5 orders, aggregating to around 3,600 crores from the state government agencies for the month of December. To get an all-round check on the order book, the debt outlook and execution more importantly, we are joined by Mr. Vijay Kumar, Head and VC Finance at NCC, who joins in. Hi, Mr. Kumar. Good morning. Thanks so much for joining in. Firstly, wishing you and your team all the best for 2023. It's ended 2022 on a good note. So good going for you. Well, I wanted an update from you on, post this big order inflow that we have seen. What's the guidance from here on? Now, earlier you were guiding for 30% revenue growth, order inflows of close to around 16,000 crores and margin improvement. Do you want to revise any of these 3 numbers upwards? Revenue, order inflow, as well as margins?
Very good morning to you and very happy new year to you. Yeah, I think this year we made a good beginning. This quarter, the third quarter, we have bagged a very good number of orders, which is like 5,000 crores. With this, actually, we haven't given any specific number as guidance, as management is to come out with specific numbers for this. So I'll not be able to exactly comment upon that. But however, I think this pace is expected to continue. If you see our order inflow during this year, approximately like 12,000 crores. We are still Q4 yet to go. So, and now you see the commodity prices are also getting moderated. So this means the profits are not under stress. Like
right. So, Mr. Kumar, right.
Yeah.
Right. So, Mr. Kumar, you're already at 12,000 crores of order inflow. Just extrapolating and doing a rough math, you should at least do 16,000 crores of order inflow for this year. Is that a fair assumption? And also earlier, I think you all had guided for a 30% revenue growth for the year, right? Which was revised upwards. Do you want to further revise that or stick to 30%?
No, 16,000 crores could be a likely figure, but we have got only 1 quarter left out, and 5,000 crores of order what we have got in Q3 is the highest awards what we got come in the last 3 quarters. Okay. But however, it is a little bit optimistic, I would say still. What is your next question?
Revenue guidance, revenue growth guidance, 30%.
Revenue growth guidance, I think we have been maintaining a pace of 30-40% in the last 2-3 quarters. I guess I think we should be able to maintain the same guidance. As I said earlier, though there is no specific guidance as a number as such, but however, I think the looking to the order flows and the order execution levels also, I think the pace is expected to continue.
Last time you told us your execution levels were a good 45% higher than year-ago levels for first half. I mean, that was understandable because we were comparing with all those delta-driven quarters in 21. How is execution now? Is second half better than your previous second half or pre-COVID second halves?
Yeah, it is actually definitely, Lata. In fact, even during monsoon season also, we have posted a good growth compared to even QOQ basis or YYY basis also. In Q1, we have clocked something like 3,000 crores of execution levels, whereas in Q2, we maintained even more than 3,000 crores of execution levels. So I would see, I think the same execution levels should continue. However, it will be a little bit more because the activity will be more in the last 2 quarters, Q3 and Q4. So it will be more than that.
Okay. Will your margins also improve? Because you specifically said that material costs have gone down.
Yeah, material costs have moderated. We expect that there should be some sort of improvement in the margins, but I'll not be able. Last half year, we have posted an EBIT of 9.6%, which is slightly less than what we have posted in the previous year to that. So going forward, I think there should be some marginal increase. That's what we can hopefully expect out of that.
Okay. And these orders that you spoke about, right? 5,000 crores in Q3, is a large chunk of it coming from state government agencies itself or any other avenues from where you're getting orders? And even in terms of order visibility, what are the avenues?
You see, largely these orders came in water, irrigation and electrical segments. We are one of the front runners in Jal Jeevan Mission. We have these orders from UP, Karnataka, and other states, Gujarat and other states like that. So going forward, I think even these segments are also going to contribute a good chunk of revenue to the top line of the company.
Have you seen any improvement in orders from state governments?
Yeah, I think our numbers reflect that. Even Q3 is much more than Q1 and Q2. We haven't seen any kind of dip in the funnel what we have in front of us.
Right. All right. Mr. Kumar, the BMC order was floated for around 5,000 crores. I think that was with regard to concretization of the Mumbai roads. And then that was cancelled. But it was expected to reopen as well. I think a couple of 100 kilometers. Have you heard anything on that front?
No, I'm not really sure about it. We have only one order from BMC with regard to that, which is sewage treatment plant in Malad. So
okay,
that is size of 4,000 crores.
All right, that's something that the street is waiting for as well. Besides that, what about your non-fund-based limits? If you could tell us what is it, and are you looking at increasing it?
Yes, we have non-fund-based limits of 11,000 crores as of now, and
yes,
we are enhancing it by another 2,000 crores this year. So I think that will be adequate to meet our requirement for next 1 to 1.5 years.
Okay. Can you give us some guidance on your debt reduction plans? What does the debt stand at right now, and any plans to bring it down? I'm not talking about the project-related debt, but overall.
See, overall debt was 1985 crores at the end of H1 2023. If you compare the same debt levels with the last year, it is already less by 220 crores, which was it was nearly 2,100 crores at the end of last H1. Okay. Now, as the working capital turnover is improving, we are seeing a good reduction in the debt. So I think that trend will continue.
Okay, we will leave it at that, Mr. Kumar. Thanks a lot for joining in, and all the best for the new year. That is, by the way, the first take on Radiant Cash. It's a decent listing, actually, considering that it was, the IPO was undersubscribed. It's not a bad listing coming through. 6% higher on Radiant Cash. We'll get more details on that in a bit. For now, we'll take a quick break on Bazaar. When we come back, Mitesh Thakkar of Earning Waves will be joining in for some technical trades. Stay tuned.